January 2022 options trade alerts. So in this video, we're going to look at January 2022. Please like this video and add a comment below and subscribe to the channel. All right, January, the S&P opened up 25. Tesla was up 10%. On January 3rd, I think we actually were profitable on PayPal. Yeah, at 2 p.m. I should have closed that out at that time. That was definitely a mistake. Bought back BlackRock. Captured about 60% of the premium. S&P was up 30. VIX was down 3.6%. Nvidia up over 2%. January 4th. New opening trade on PayPal. Sold Nvidia. The market was looking weak. VIX is up 4%. New trade on Amazon. January 5th, new opening trade on Amazon. Sold AMT, the April. Notice how I'm going further out with the expirations. It's not horrible that I did that. The only issue is that when volatility expanded, it did use up more buying power. So yes, these trades are going to end up being profitable, but it did kind of use up more buying power as the VIX increased, because at the end of January and then also in February, the VIX increased over 35, so it did use up a little bit more buying power, and then there was some concern about rolling the positions, etc. Sold calls on PayPal. Definitely should have sold more calls. What I should have done is sold more calls on PayPal and then used that premium to close out the short puts. But I didn't do that. S&P down 92. See VIX spiked up 17%. January 6th, decent opening. PayPal was back up over 190. Amazon's a good opportunity. S&P down 5. January 7th. If it closes down, it would be the 4th day in a row. I rolled the PayPal position, rolled it down by $7.50 and financed it by selling some additional puts. New opening position in Amazon. S&P down 19. VIX down 4%. January 10th, S&P down almost 50. VIX up around 13%. New trade on Amazon picked up over $1,000. S&P down 6. It's the 5th straight day that the S&P fell. But at one point it was down 94. Decent opening. VIX is up almost 5%. So calls on Zillow. PayPal's up over $4. S&P up 43. January 12th, closing trade. 45% gain in less than 2 days. New opening trade on Amazon, B+ grade, S&P up 13. New opening trade, Dollar General. New opening trade for Amazon. Picked up almost $1,500. 2 new trades. S&P down 67. January 14th. So I roll forward PayPal and I financed it by selling calls. Then I sold additional calls. Then I sold more calls. S&P up 4. January 17th, the market is closed. Amazon, Microsoft, and DG, Dollar General are decent opportunities. I rolled down PayPal, financed it by selling calls. S&P down 86, VIX up 19%. S&P was down 34, but now it's up almost 15. So I sold more calls. Then I used that premium and I rolled down the puts on PayPal. Then it looks like I sold a 0 DTE call on SPX. Sold an SPX call that expires today. You can ignore it or you can sell SPY if you'd like. Also sold Amazon calls with a strike at 3,800 and picked up about $1,400. Notice how I'm bearish now. I feel that the market will go down, but we will see. I don't feel strongly about the market direction. For SPX, that's a B trade. For Amazon, it's also a B. Made some good adjustments. S&P down 44. VIX up again, almost 5%. VIX is almost trading at 24. So the market sold off heading into the close. Anytime it sells off like the last 2 or 3 hours of the trading day, it's definitely a red flag. January 20th, PayPal rolled it down again. So puts on PayPal, so puts on Amazon, new opening trade B+. S&P down 50, VIX up another 7%. Went from up 55 to down 55 and closed down 50. The S&P is down $180 in 3 days, almost 4%. January 21st, rolling PayPal. I mean, here, at least I'm doing the right thing by financing it by selling calls. That's smart. The problem is, as you'll see in February, that we got hit with the earnings announcement. So, that cost us some money. Then I rolled down the PayPal puts again, and I financed it by selling the 210 call, which was smart. And then I actually bought that back by financing it and selling calls, which was also smart. S&P down 85. The S&P fell almost 6% in 4 days. January 24th, no trades. Overnight it was up 35, but then it fell to down 70. So I rolled this position from 3 to 2, and I picked up a decent amount of incremental premium, about $1,300 in extra premium, and I decreased the size from 3 to 2. Bend but don't break. Amazon is now up. Our expirations are too long. Then I provided a voice note. January 25th, small opening trade, B+ grade. Sold VIX calls. I rolled Microsoft. Consolidated 2 for 1. Then I sold some additional calls on PayPal, and I rolled down the puts. S&P down 54, VIX up 4%, but VVIX was down 2%, Amazon down 91, Nvidia down 4.5%. So the S&P was up slightly today before around an hour and 15 minutes prior to closing, and then it just collapsed. Then I said that I believe that the market will stabilize over the next few days. Let's see what happens. Roll PayPal. Financed it by selling calls. Rolled this position as well. Then I bought back one of the 155s by selling calls against it. S&P down 6.5. Definitely a wild ride, as the S&P was up 85 and then fell around 50. Tesla up 2%. I think the price action was decent. The market fought its way back and didn't capitulate. Eventually volatility will contract. Make good adjustments. Roll PayPal. Financed it by selling calls. Bought back one of the PayPal puts. Financed it by selling calls. Then I roll it forward by to decrease the strike by $10. This was a big mistake. This trade right here was a mistake. S&P down 23. Tesla down almost 12%. Nvidia down 8.5%. January 28th. S&P up 105. VIX down 9%. If next week is reliably stable, then we can start making some adjustments to reduce durations on a few positions. Decent opening. We have a ton of positions set to expire this week. PayPal earnings tomorrow. Closed out the VIX calls. Closed for 60% of the premium capture after holding for 6 days. S&P up 84, VIX down another 10%. All right, so that's January. And let me know your thoughts. Please leave a comment below and subscribe to the channel. And I'll do February as well.